because Christmas falls on a Monday.
It's like
So
I look at the slacks that I have to wear to the office, and I'm gonna try to go until the end of the year without having to go to the dry cleaners.
Welcome to episode 101 of Farm to Markets. This is a show where participants only get 5 minutes to state their opinion. The person with the most time at the end wins, but there are no prizes. Today we're talking about the markets overreacting, greedflation, small cap stocks, F1 racing in Vegas, and hunting vests. So the Wall Street cliche is that investors hate uncertainty. Their response certainly has been to swing from being entirely certain about one thing to quite sure that the opposite is true, leading to violent moves in the market. The scale of the moves are out of whack with what has been happening. Core inflation came in at 0.23% month on month against Wall Street's expectations of 0.3%. Year-on-year inflation was 3.2%, below the predicted 3.3%. Good news for sure, but clearly not enough to justify the 5.4% leap in the Russell 2000 or even the 1.9% on the S&P 500. What do you think is behind the market's overreaction, and do you think they're overreacting?
Well, I guess it really depends on who you ask, which is part of the problem. There's increasingly just dueling predictions and expectations for 2024. I think just about everybody, at least all the big financial firms, agree on pretty much one thing, which is the economy is going to slow down in 2024, but that's kind of where the agreement ends. If you look at like Deutsche Bank out of Europe, they just released analysis saying that they're predicting a recession in the United States in 2024 and 175 basis point rate cuts by the end of the year. So by this time next year, rates will be 1.75% lower. Their analysis also suggests that traders recently have already priced in 100 basis points. So probably somewhere in the neighborhood of 50 to 75 basis points to go. That's what they're saying. JP Morgan is also predicting similar rate cuts and a recession for 2024. But not everybody agrees. Like I mentioned, Bank of America is saying economy will slow down, but no recession, and they don't see rate cuts coming. There are other banks and financial firms that largely agree with Bank of America. Higher for longer is what they're still thinking. So I think traders are just trying to get out ahead of what they think is going to happen, but still nobody really knows what's going to happen. And in the meantime, the economy is still firing on all cylinders, largely because consumers are spending like drunken sailors. They think they're going to break the record for the holiday spending this year, $967 billion in credit card debt. Q3 2023 just reached all-time high at $4.8 trillion. That's consumer credit card debt. So people are spending money left and right. They're fueling, consumer-driven economy, but all these financial firms are saying we think that these rates are going to finally have some impact on the economy next year, and it's going to be either a recession or a slowdown. They can't agree. So right now, like I said, I think traders are just trying to figure out which of these trends is going to stick. And I guess recently they seem to be thinking that rates are coming down because they're buying up stocks. So I guess ultimately we're going to find out in the next few months who's right.
To me, this was just another typical Wall Street analyst grossly overthinking market behavior without coming to any real meaningful conclusions. When I read this, it was almost like I was reading a Rube Goldberg device. Those old contraptions with like pulleys and trap doors and hammers just to like open a can of soda or something. I mean, the author wrote 1,000 words and he threw things out like the money supply and the ICE volatility index and Ukraine and the Middle East and China, foreign workers, soft landings. And he only concluded that markets are volatile and we don't really know why. Now, I've made this reference before on this podcast, but situations like this, these market prediction articles, which are a dime a dozen, it's kind of like that scene from A Princess Bride or The Princess Bride, where the bad guy has to choose a cup of wine, and one cup of wine is poisoned and the other cup isn't. And he basically goes through all of these outlandish scenarios like, well, I know it's not mine because only a fool would think he would take the one in front of his, unless you knew I thought I was a fool. But then if you knew I knew I knew, and basically in the end, he dies. So I don't want to associate the dying part with the stock or the bond markets, but the point is, it doesn't matter. In the end, nobody has those deduction skills to accurately predict market behavior, and you'd be better off just not trying at all. Just follow the basic rules, diversify, invest systematically, stick to an investment plan, and any market volatility is just part of the game. It doesn't really matter why.
What is the benchmark for overreaction? I mean, is there like a number 7 is normal reaction, which is the appropriate reaction? But if it's above 7, it's an overreaction. I've been doing this for 30 years. I don't see anything different about now than it was like 30 years ago. The only thing I will say is that markets tend to swing from one end to the other much more quickly, but that's primarily a function of high-speed trading and all of the institutional investors trying to get ahead of the wave at the same time. But for our clients, we don't take phone calls coming in where people are overreacting one way or the other, any different than they did 30 years ago. It's exactly the same. But the Wall Street Journal, to what both of you gentlemen who have already spoken have alluded, is that this writer has got a deadline. He was probably goofing off for the last couple of days. He's got to get his 750 words in by the end of the day and just had to come up with something. So a market that's overreacting seemed like the best way to get on the editor's good side at the last minute.
Yeah, I mean, I think it has nothing to do, like, again, like you guys, I think it has nothing to do with anything in the article, given the fact that you can make a trade like while you're eating like your breakfast cereal in the morning, is that the technology has made it way easier to make trades, and just, having your phone in front of you where you get the news, and then you're able to just, switch screens and make a trade on your, your Robinhood app or your Charles Schwab app or whatever, that helps drive the volatility in the market. So I don't think it's that it's overreacting. I just think technology has made it to a point where there's more people participating. Okay. So next one is that Senator Bob Casey recently released the Special Report on Greedflation. So this publication attempts to explain high inflation by appealing to corporate greed, and it further proposes policies on how to deal with the greed. So, did you agree with Senator Casey that basically inflation is caused by greed?
I will say yes and no, and I'll explain. So, corporate greed is certainly a factor when you deal with prices of things. I'll get back to that, but I do not believe that it is generally the driver of inflation. I think recent inflation has been driven largely by disrupted supply chains and manufacturing processes. And I don't think too many economists would disagree with that being the primary driver. Now, back to greed. I guess if we want to use a very loose term for greed, then sure, corporate greed is a factor. Companies want to make as much money as possible selling the things that they sell, whether it's a good or a service. And people want to spend as little as possible acquiring. So if you want to call that greed, then okay. But businesses are just going to try and make as much as they can selling their services. I don't see anything particularly wrong with that. And again, if you want to call it greed, I guess you can. For those out there who may not be familiar, where a company's willingness to sell at a price meets a consumer's willingness to pay for something, you have something called equilibrium, and that's where the price comes from. So if people are generally okay paying $2 for a loaf of bread, and a company's generally okay selling a loaf of bread for $2, even if the company could sell it for $1.75 and still be profitable, that's kind of where prices come from. If you want to call the company charging an extra 25 cents for that piece of bread greed, I guess, but I don't really see it as a problem or as a driver of inflation.
Blaming the higher costs on greedflation, I think it's politically convenient, but it's deeply economically flawed. I imagine that Senator Casey, He used that the victim language, and he appealed to the pathos of his constituents because that was probably the expectation of the platform in which he was elected. He used that story. We didn't read the story in the article, but I guess like Anne is a mother of two, times are tough, prices are high, corporates are greedy, and it's all their fault. And this article did a well job, kind of, dismantling that. And really, it's the inflation is the result of injecting tons of money into the economy. You have higher demand, you have more dollars chasing the same amount of goods, so the prices are going to go up. But it sure beats the pants off of the alternative, where you have no goods on the shelves at all. If corporations were not greedy and they reduced prices to the pre-pandemic levels, much like toilet paper, what you have is consumption at a very deep and narrow level where only a few consumers buy up all the goods and there's none on the shelves. So I think these government intervention policies are no good, and let the free markets do what they want. And basically, I support the article's position on that.
Senator Casey essentially is an ideologue who basically doesn't like the free markets very much. And this is just another way for him to rail against the machine. Fact is that if you have 150 widgets to sell and you've got 300 people stand in line to buy widgets at $10 a widget, if you make them incredibly inexpensive, you're going to have 600 people in line for those. And the first people in line are going to buy everything off the shelves. There'll be no widgets whatsoever. However, if you raise the price to where you've got 150 widgets and 300 people in line, you raise the price until 150 people voluntarily drop out of line, then your supply actually meets your demand. Years ago, when my parents, who lived just north of New Orleans, were part of Hurricane Katrina, they went over to Mississippi and they had, I think, over 20 family members in 2 hotel rooms. And those hotel rooms cost about $500 a night. And a lot of people were screaming and yelling, saying, my gosh, these greedy hotel keepers are taking advantage of this situation. Well, there were thousands and thousands and thousands of people who needed hotel rooms when that happened. By raising the price to 500, instead of having 2 people in a room, they had 20 people in a room because that was the going rate. So to the article is it basically stated that greedflation is actually a good thing because it closely aligns demand and supply to the point where you get equilibrium. Because if you don't, to what Drew said, you're going to have shortages, which is a much bigger monster to contend with.
Yeah, Thomas Sowell talks about the same thing Joe just said in Basic Economics, where basically, as the price goes up with if price goes up with demand, you basically get a more efficient use of whatever resource is now at a higher price. So, Joe's hotel analogy, basically fits that model exactly. If, the price of hotels is going up, you get 4 or 5 people in the same hotel room. Now it's being used more efficiently, whereas opposed to just one person sitting in there. So yeah, so that's I would agree with that. So, all right. So the next one is from Bespoke, which is just just a financial research website, and basically is that the prevailing narrative this year has been that the only thing driving the market has been mega cap stocks, so like Apple, Microsoft, Google, like those ones, and for the most part that's been true. But when they broke it down by types of stocks, by sector, they noticed that the smallest of some of these small cap stocks have basically been getting the same returns that the mega cap stocks have been getting. And why do you think that there's been zero media coverage on these small cap stocks versus the mega cap stocks getting the same returns?
I looked at the article, and so the smallest small caps were up around 13% year to date, while the smallest mid caps are the ones that seem to perform at the same rate as the largest large caps.
Yeah, sorry, it's mid cap. Sorry, my bad.
Yeah. Well, when I went through and looked at some of the smallest small caps in the S&P 600 small cap index, there didn't seem to be too much correlation. It just seemed to be a smattering of random companies that had something going on. One of them that caught my eye was a company I was familiar with, Chewy's. It's a restaurant from Austin, Texas. It's now a chain. They're growing like gangbusters in all the states that have big inward migration and large, mid-sized cities becoming large cities. So I don't know if there's any particular correlation between that and the economy at large, between some of like the oil and gas service companies that I saw that were growing or whatever. But it didn't seem to have like a major theme. It's just a bunch of different companies that happen to be doing well in those small cap and mid cap categories.
This is basically, it's just, it boils down to a popularity contest. There's a lot more media and investor focus on mega cap stocks. There's always been like this disproportionate focus on the mega cap companies. Your Microsofts, your Apples, your Facebooks, your Teslas. These are the household names that have significant market influence, and they make better news. If you showed the quarterly report on the news, like for SOS Inc. or Jinko Solar, people wouldn't know what the heck you're talking about. So it's kind of like, who's that art? It's kind of like Post Malone. He gets more media attention in the music world when he gets a new face tattoo than Yo-Yo Ma does when he performs at the New York Philharmonic. So it's a popularity contest. There also is a bias in investing. There's this perceived safety in larger cap stocks. So during times of economic uncertainty or market volatility, investors tend to gravitate towards these larger, more established companies, and they get more of the news attention. There's also a lack of analytical coverage on these smaller cap stocks. Everyone wants to cover the big boys, not the small ones. So I think basically it's just popularity contest. You see the big ones, you don't see much of the small ones.
I think the article is written where it's basically focusing on one part of history and time. And at this particular point, it just seems kind of interesting that the smallest mid caps are doing it as well as the largest mega caps, when mega caps are doing really, really well. But we're looking at an index. So at this particular point in history, it's quite possible that there were 99 mid caps stocks that were relatively small, that did marginally well or even not so well, and one that was up a bazillion %. So, but you get the impression that the entire index is doing as well as the entire mega cap index. I don't think there's anything, any sort of patterns that are coming up here that would suggest that if we could use this information, we might be able to find great investment ideas. But once again, this is a financial, this is financial pornography that's sold on these kind of trends. And people are always looking for that angle, but I don't think it actually provides any information for the serious individual investor.
Yeah, the other reason too is that investing in Apple that has like $1 billion in cash versus buying like some smaller like mid cap stock that has like $1 billion in debt is a big difference. Is that more people are going to buy Apple because it's up 18% and it's safe. Whereas you get a mid cap stock that nobody's heard of that has a ton of debt and no revenue. Not as many people are buying it, and because not as many people are buying it, it's not going to be as widely publicized. So maybe there are some like small or some mid cap stocks that are doing all right. Great, but it doesn't mean that everybody's interested in them. And also probably since November, when we started seeing like inflation data cooling a little bit, that's probably when you started seeing like the small caps wrapping up, because I think like the Russell 2000 like over this last month has had like a pretty strong month. So just having that cooling inflation data has also pushed them up towards the end of the year, whereas like the mega caps were up right at the beginning. Okay, so as Formula One drivers rose slowly onto hydraulic platforms in a storm of lasers, drones, and light rain on Wednesday night, a few of them had to admit that they were no longer sure what they were doing here. Officially, they had traveled to Las Vegas for the 21st of the 22nd Grand Prix. Okay, so some Grand Prix in Vegas that was on the season's calendar, and they're basically going to race around a newly built circuit that they basically made it look like Mario Kart. So Vegas's thing is that they brought in hockey, then they brought in football, then they brought in baseball, and they're trying to make a show of it, and they're trying to do the same thing with Formula One. So instead of just having like a plain vanilla track, now we have like a light show. It looks like Mario Kart. There's all kinds of bells and whistles that go along with it, and they're trying to make F1 racing like a mainstream sport in America. Do you think they're going to succeed with that?
This is really tough.
Yeah.
Oh, you're out.
Yeah, I'm out of time, so I don't know if you want me to talk or not.
I don't care. If you want to give your opinion, we kind of a block anyway.
It doesn't matter.
I'll do it in like 15 seconds. I looked up the most popular sports in America, and 70% of Americans say they actively watch sports. 17% of that 70% say they actively watch F1. That roughly comes out to 1 in every 8 Americans. I'd argue that's already a mainstream sport.
I don't know much about F1, so I can't really speak intelligently about it, but it seems like they're trying to include the American audience, and they picked Vegas, so I think it's a huge gamble. It seems like Vegas might be a little too flashy. It might alienate a lot of the original F1 fan base, because it's kind of a classy, affluent sport held in a lot of cities in Europe. So choosing Vegas with the lasers and the Vegas Strip and all that stuff, it might do more damage to the European fan base, but I could certainly see it increasing the fan base in the U.S. So I think it's a gamble, and I'll actually be kind of interested to see what happens.
In my head, this is kind of like Rocky 1, where Apollo Creed comes into the ring, and they're got James Brown singing "Living in America," and they got all this glitter, graffiti, and flashing lights, and flamboyant costumes and that sort of thing, to try to bring a little bit of spice and sizzle to a rather blue collar sort of event. I think Vegas is not going to go broke doing this. I think that the people in Vegas know exactly, from a marketing perspective, what it takes to separate people from their money, and I think they're probably going to be rather successful in the long run.
Everybody that's traveled to Vegas to watch a sporting event has said that the show that they put on like before the event is really good. So I guess they've done like a really good job. I don't know what like light. I don't know what all this stuff is. I don't think it's going to increase the popularity. I bet people who like F1 will continue to like F1. People that don't will probably tune in to see like what's going on. But at the end of the day, if you don't have like an interest in cars or know what's going on, instead of cars going around a circle track, F1 is basically cars going around a not circle track, So, but if you like it, if you're like an engineer, you want to see if the Ferrari does better than the Mitsubishi, and all the people, then you're probably going to continue to like it. But I don't think it's going to increase the fan base of F1 racing significantly. All right. So the last one is that, so Washington is one of the increasing number of states embracing blaze pink, the highly visible fluorescent safety color, as an alternative to the traditional blaze orange that adorns hunting vests, caps, shirts, jackets, sweaters, because it's easier to see. The thing is, a lot of hunters have a problem because they don't want to put like a blaze pink strip on their rifle or wear like a pink vest out in the woods while they're hunting. Because of safety, would you wear a blaze pink outfit while hunting, or would you go with the less safe blaze orange?
If I didn't already have orange, I would consider it, but I have orange, so I'm not changing.
I'm going to stick to orange. I don't think there's anything wrong with allowing people to wear pink. If you can wear orange and pink, great.
I'll just go bow hunting.
I think,
Yeah, but you have to wear something.
yeah.
You don't. Not for bow hunting, you don't.
You don't have to
You can wear camouflage for bow hunting.
Even on public lands?
Yeah.
Oh, okay.
Do people actually do that though? I mean, like if you're like hidden in the woods and like there's another bow hunter out there, like you're just taking the risk that nobody's gonna think you're a deer or something? Like honestly, I don't know. Like I might consider it just to not get shot while I'm out there. If it's a safer color, I'd be like, I'd probably consider it and maybe put my pride away so I don't like take a round in the back or something like that. But
I mean, if if you end up hunting in tagging an animal, I guess it's kind of a wash,
Yeah, you
for
still
your
did it.
message.
Yeah,
You look good in pink, though, Tom.
I don't think so. I don't hunt, so it's not really an issue for me. So
Actually, didn't they say that deer see pink? They have a harder time seeing pink, so it gives the hunter a slight advantage as well.
can they see orange? Are deer colorblind?
Evidently, they are.
When like fly fishing, a lot of the lures are or at least some of them are blaze pink. So in my tackle box I have a lot of blaze pink lures because supposedly fish have an easier time seeing that color versus orange. So it might be the same thing with deer.
Hmm.
And I don't have a problem using my blaze pink lure, but I might feel a little uncomfortable having
I
a
wonder
vest.
the lure thing. I wonder if that's just a marketing ploy. Like dog food, I've never understood why dog toys and dog food has to be these like bright color. They're colorblind. Like they're actually, they see black and white.
Mhm.
Who are you helping? You're helping the consumer.
Yeah, I don't think the lures are because it's like it's. I don't think it's any more expensive than like like a black piece of like a pipe cleaner. It's not. It's like really cheap material and they cost like a
And
couple.
this is the state of Washington who's implementing this policy.
Exactly.
So it's probably Seattle, not Eastern Washington, that's pushing for this.
Well, I think
It's
they said
probably
like
some
a dozen states have instituted something along these lines too, but Washington's just the latest.
There's probably some
Because
research.
Ohio hated it so much they like repealed it. I think I saw briefly something that
They-
like they recently legalized and then banned pink again because so many people hated it.
Wait, they actually banned it.
I think that's what I saw. Let me see if I can find that.
Pretty interesting. My guess is that some researcher basically just had a grudge against like a bunch of like hunters and was like, it's safer.
There's like groups like Never Pinkers. I mean, it's not like they're saying you
Oh,
can't
yeah.
wear orange anymore.
Yeah, I'm surprised they would just ban it though. Like, do you legally have to wear orange like in Montana when you go hunting?
Evidently
believe
not
so.
for bow hunting. On public lands, I believe you do on public lands. On private lands, you can pretty much wear whatever you want, right?
I was under the impression you didn't have to wear it for bow hunting, but I could be wrong.
Okay.
I'm not going to waste too much time. I thought I saw that when I was looking up some article that
Okay.
Ohio had legalized it, but then were either they had or were considering like eliminating the color again. So
Okay. All right. Well,
I
that's
think this
it
is the
for.
longest topic we've ever talked about.
Yeah,
Yeah.
probably is. I don't know how this has gone for like what? I don't even know. I have no idea how long.
I think
it's been.
Tom probably won, and then everybody just started talking in his time. So
Yeah, now I have like the least amount. Yeah, I guess that technically makes Joe the winner again. So.
yeah.
All right. All right. That's it for episode 101. We'll see you next week.